Good afternoon, distinguished board members and Burlington staff. I am Matthew Guilfoy, and I'm here to present Burlington's Process Improvement Plan for 2023. This presentation will detail the statement of the problem, a SWOT analysis, the process proposal, goals and objectives, budget, risk analysis, and the action plan. Burlington has grown from a single store in 1972 to the 877 store chain it is today. The company's initial public offering was in 2013 and has experienced steady growth since. Currently listed 377th on the Fortune 500 list, over the past 2 years, 192 new stores have been opened. This substantial growth in a short amount of time has caused a 16% increase in financial liabilities, lowering its current ratio to 1.3, which will have a negative impact on the company's credibility in the market and affect the potential of them being able to raise money for investment for future growth. According to the Burlington Investor Presentation of 2022, Burlington has a strong track record of growth and profit improvement, but it remains the smallest, least productive, and least profitable of the major off-price retail chains. Creating more stores has brought in additional revenue, but has also created the need for new hires and logistic costs. These contributed to higher operating costs. Due to rapid expansion, Burlington's current ratio, or assets to debt liabilities, has put its long-term goal of reaching 2,000 stores at risk until the current ratio improves. Our improvement strategy involves adjusting Burlington's business model to include online retail, an aggressive marketing campaign that saturates the radio and television airwaves, and website reconfiguration. It's through these three focus areas we will look to increase revenue that can be applied to the company's debts. In order to effectively implement the improvement strategy and develop the process proposal, a SWOT analysis was needed to gauge the company's current conditions and posture in the retail market. Our findings indicate Burlington Inc. has a small yet strong presence in the retail market. Through its revenue growth, expansion efforts, and business model, it could potentially climb higher on the Fortune 500 ladder. Increasing revenues using a multi-channel approach and seizing the opportunities available will put it on par with its competitors. By shoring up the strengths and seizing the opportunities within this SWOT analysis, Burlington will be able to achieve its goals. In the first week of January 2023, Burlington will relaunch its website with online purchase options available in order to take advantage of the growing online retail market. Twice the amount of radio and television commercials will consume the airwaves, informing the public of recent changes to Burlington's website. Additionally, a perk of 5% off your first online purchase will be issued to loyalty program members. The goals and objectives for this process improvement plan were developed to support the company's strategic long-term goal and align with the SMART goals principles. Increasing Burlington's revenue is the single most important tactical goal associated with this improvement plan. We will look to increase revenue by 10% each quarter over the next year beginning in January of 2023. Through quarterly monitoring, by comparing reports to the previous year's quarterlies supplied to the Securities Exchange Commission, the company will be able to gauge whether it will meet its goal of increasing its revenue in order to offset the increase in debt and liabilities over the year. More interactions with the consumer can lead to additional sales and revenue. Currently, Burlington reaches the consumer through a mixed media of video, audio, and digital advertising. The revision of the marketing campaign will go into effect the first week of January 2023 and will run till the end of March. This quarter, regional managers will report monthly if they experience more customers in stores and sales. Increasing brand awareness and customer interaction supports increasing revenue by bringing more customers into the stores and online. Improving the current ratio is the final tactical goal that supports the strategic goal. Burlington's long-term strategic goal is to reach 2,000 stores, and this is in jeopardy of not coming to fruition. This is due to the current upward trend in liabilities and debt that have lowered the current ratio. Achieving this goal would be contingent on the success of increasing revenue. By stabilizing the current ratio and lowering debt, Burlington will be more attractive to lenders in order to secure funding for further growth. Included in the proposed budget is an additional $90 million in the first quarter allocated to updating current advertising and purchasing more airtime for radio and television broadcasts. These additional funds will only be applied during the January to March 2023 quarter. From April on, during the fiscal year of 2023, Burlington will revert to normal operating costs. It is the intent to flood the marketing channels during the first quarter with Burlington's reintroduction of online retail. All of the risk associated to the implementation of this process improvement plan is mitigated to an acceptable level. Mitigation measures are implemented by area managers and monitored for adjustments. The action plan details the responsibility of key stakeholders in this plan. Each stakeholder assigned to the action owns that phase of the process and will provide updates to the project manager. The timely execution of this action plan and the conduct of stakeholders will determine the overall success of the process improvement plan. In addition to the weekly meetings, a 6-month and 1-year stakeholder review will be conducted on 1 July and 30 December of 2023 to assess the plan's performance and to apply changes if necessary. After 1 year, if the plan is successful in helping the company achieve its goals, the process will undergo revision to maintain relevance in supporting Burlington's mission. Burlington Stores has a strong presence in the retail market and has the potential to be highly successful in its continued expansion.